Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Monday, February 18th, and looking at the S&P here, you see a market that continues to have an upside bias. The only thing I want to point out is, eventually this trend is going to end, and we all know that, but we want to kind of try to, not try to predict when it's going to end, but just continue to look for clues. And right now I think we're in a constructive uptrend still. One thing that I like to look at are the monthly point of controls, and a better way to look at this, I continue to believe that the best way to look at monthly point of controls are through the 1 hour time frame. So I'm looking at a 1 hour 90-day chart here, and we have bounced off successfully. We have bounced off last month's point of control, and now this current month's point of control is formed up at 1513 or so. We're probably going to dip under there at times. You can see twice already we've gone down to test around 1510 where we have bounced. But I would, expect the expected, right? Which is we have this sideways channel right here that is formed, and until we break out one way or the other, you can assume that nothing's going to change. However, that shouldn't stop you from looking for, especially from the buy side, looking for buying opportunities, for meaningful buying opportunities down towards 1512. And all you do is you wait for the pullback. The pullback happens. You wait for the buyers to come in. If the buyers start to come in, you like the setup, you take it, and guess where your target is? Somewhere around 1520. Give or take, and depending on where you like to take your profits. But that's kind of what you're expecting, and expecting a breakout is fine, like new highs, only because we're still in an uptrend. But if this continues to be, for example, right here 1522 or so, we have a little double top. We have a higher low here, so that's fine. But you just want to keep those little things in mind, because that's how you start to identify a potential move down. But so far, I would, there has been money to be made in the downside, but it's been very limited. The easiest profits by far have been to the upside, and I'm talking about day trading stuff. The NASDAQ, I'm going to pull up the other chart now. All right. We're seeing the NASDAQ, and one thing that I've been studying lately are Andrew pitchforks, median lines, whatever you want to call them. But they've actually improved my trading some just for the little time I've been using them. So what we're looking at here is the pullback to the median line. That doesn't necessarily mean you look to buy it. However, in the past, it's been right to be a buyer. You just kind of continue to watch this thing and use the median line in general as your pivot. Notice another thing to notice is at the beginning of this month, we tested last month's value area low twice, and we have successfully bounced off that level. So maybe we want to keep an eye on this month's value area low and kind of give us an idea of, okay, if we're looking for a maximum excursion of what's been going on here, which is, just a gradual rise, then this current month's point of control, value area low should be of interest, which is basically 2735, maybe 2730 on the downside. So just keep that in mind on the NASDAQ, which a lot of people look at because of Apple and Google. But right now, Apple is, we're getting some resistance here. But the trade for me right now is as long as last month's point of control holds, I think there's a chance that this could be another higher low here, and we could see the start of a potential close of the gap. My first target would really be just sub of 500, and we'll just kind of go from there. So if the sellers persist, notice it's been on light volume, so that's a good thing for the buyers, in my opinion. I think that could be a way for the big boys to get into this thing and potentially gobble it up at lower levels, pretty much right here, right now. So we'll have to continue to watch that. You know, I will show a shorter time frame. Bear with me one second. Bring up a chart of Apple. We're at a 400 tick here. We can even zoom it out even more if that's what's necessary. No. Okay, there we go. You know, pitchforks to the downside, but we're at the bottom end of the range where sellers should run out of energy and we should see some type of reversal. You know, that remains to be seen, but the target on the upside's this median line here, this blue line, and that's your target to the upside. We'll see if, you know, that happens. I guess I'll just draw, just because I'm curious. Bear with me one second. Alright, that's all I wanted to see. Alright, so, excuse me there. Let's go to Google really quick. This thing just continues to climb. It's been the tech name to be in. And it's the most frustrating thing for me is I've completely missed this. However, it's working, and if you're long this, there's really no reason to sell it. Just keep a trailing stop. And you know, the thing about trailing stops are they'll tend to keep you in longer than you think in a trend. And so instead of taking profits when you first have the opportunity, you know, maybe you give it some time. And as long as it doesn't breach, you know, major lows, then I think you're okay. But, you know, you just kind of gradually raise your stop as this continues to move up. You continue to watch the price action. And as long as the price action stays constructive, you're going to get these sell bars naturally. But as long as it stays within, you know, the market context, which is, you know, right here, right now, you have this uptrend going. As long as we're in this uptrend, why sell right now? You know, despite that, 800 may be the highs here, 793.26. You know, you're not going to catch the high, you're not going to catch the low, but you want to do your best job of trying to catch the majority of the move. And the only way you can do that is to stay involved and let your winners run. All right. Oil. Again, median lines here. We're seeing good resistance up at the top. Here we've pulled back to the middle median line. And what we're seeing here, I'm just going to draw some lines, is a market that is range bound within an uptrend. So instead of just blatantly looking at, you know, what this market has been doing, let's look at what it is doing. And it's pretty clear that these highs around 98 or so and these lows around 95, you know, that's where February has been. And you know, some people overlook that, and it can be a little detrimental to your trading. But you know, that's why we live and we learn. However, I'm looking at some point of controls here. 86.63, 93.30, and let's see, 95. If this thing drifts long enough to the right, which would be up until about the 25th, so the end of this week or so, the beginning of next week, we could see, you know, you could see just a sideways drift, maybe within this range, and then we try to go to 100 or what have you. But you want to keep in mind these point of controls that have not been touched yet, because I really do think they matter. So keep that in mind. Let's gold. We talked about this. It broke out on Monday, broke out to the downside. So this is something that you definitely don't want to be long. The sellers continue to win this thing. This is what's important. Just because you have a bullish thesis on gold doesn't mean it's right to be long gold right now. And I think that's what gold is showing you. It's showing you that, yeah, this could be a great level to buy down here at 1590. But if this overall trend persists, which it is for right now, then your first target is around 1625, 1630. And then if it then gains momentum, then you could have an upward march up towards 1660, 1650, depending on where this median line, wherever this median line is at that point in time. But the sell was up here on gold, whether it was the lower highs or the breakdown. The sell is not here on gold because has it been right to be a buyer or seller of gold down at these levels? And it's pretty clear to me. So that's the point, is if you are not short gold but you want to be okay with the fact that you're late to this trade, and just wait for the next trade, because it's not worth it right now unless if you're in a day trading time frame. And in that case, okay, I'll give it to you. There could be a little momentum swing, 10 points, 20 points from current levels. But if you're looking for a multi-day move, then, you missed it. That was this week. All right, let's see. Goldman Sachs. What interests me about this is, well, other than the ridiculous uptrend that we've been in, is this thing just continues. I mean, anytime the market is down, it seems like Goldman Sachs is up. And that's a good thing if you're long Goldman Sachs. We were long Goldman Sachs at 122 and just got flat. And that's very frustrating. Got flat up at this median line here. And you can see staying in the trade was the right trade. And it's a little frustrating looking back on it now. But we can't do anything about it now. Now we have to just anticipate the next trade. And I don't see one right now. It's just going to have to continue to do what it's doing until we really see an opportunity. JP Morgan, on the other hand, is, I think that, I don't know, maybe I just like the potential chart setup more. But you look at this 48, 42 level, give or take 48, 40. Right now that's holding up short-term buyers for the last couple of days. From there, you just kind of, let me zoom out so we can see it better. There we go. You just kind of look at where the last major pivot was in JP Morgan. And I could make a couple arguments. I could make right here at 47.85, and then, you could really call this a zone if you wanted to, but 47. And right now, I think where I'm getting at is if this doesn't hold 48.40, we should pull back to 47.90 or so. And if that's the case, maybe you get a little skeptical about your long on, or how long you are JP Morgan, and look to lighten up, trail your stops, make sure your stops are in place. Not saying that this couldn't go up anymore, but look at what's been going on. Really, we haven't seen one major pullback. So a $2 pullback or so, or a $1.50 pullback, is something that we've seen maybe once since the beginning of the year, and that's noteworthy. And eventually this is going to end. Just continue to keep your eye on it. If you're long, there's no reason to flatten. Treasuries. This has been actually a pretty good trade to the downside over the long term, the last 4 months or so. Eventually this trend's going to end. I think we have our defined range here. We haven't made a new high above 144 and change. We haven't made a new low below 142.05 or so. And as long as that remains, I think you're range bound. If you want to call it a downward bias, that's perfectly fine, because it's really facts. Continues to be right to be a seller around this 144 EMA, and we're getting close to that, so you want to be paying attention to that. However, just like gold, you have these levels, these point of controls that haven't been touched since that trading month, and I think eventually that reverts. Notice here, the point of control was touched in the following month, but we go on. What happens on, looks like, here's the first of the year. not touched. And what happens? Basically, that gap holds. So that's kind of interesting, because if that gap didn't hold, arguably you'd go and close this gap, and then really your test is the point of control. That's where all the money is. Again, last month we sell off. We can't retest it yet. So that's why you're looking at this and you're like, okay, this could be a potential base. You just want to keep your eye on it, and that kind of goes with a sell-off in equities. Let's look at the euro. All right, this has been a great uptrend. This has been the euro has been such a fantastic trading tool the last month or so. It seems like every move has a potential of 30, 40 ticks, and it's just really, it's been a good month in the euro trading wise. So here you are, you're pulling back, and here's a good example of that point of control thing I was just talking about. You're pulling back to the point of control where you're seeing a little bit of balance. You also have this month's point of control here. So this is a very important level for the euro. You kind of give it this little squeeze here, and then you're looking for a move. And I just want to say the Fed is speaking on Wednesday. So, not saying that it'll whip the euro like Mario Draghi would do, but you're at such a crucial level on the euro that there's that possibility. Which kind of brings you to the dollar. And I'm going to delete all of these. And you can see, where has it been right to be a buyer of the dollar? Without a doubt, right below 79, you are looking for reversals. Where has it been right to be a seller? Well, that gets a little sloppy. And you could, draw a trend line and be like here, but now that's broken. So you'd arguably say that this trend line doesn't have as much validity, unless you're one that likes the retest. I think what I'm going to do is just go with, bear with me 1 second, the top end of this range. If you want, I can draw a line here too. And that's how I'm going to look at it. This is the dollar range. It's only been right to be a seller for basically a month's time frame, when it's gotten to 81 twice now, or 81.50 back at the end of last year. Now it's been right to be a buyer, as we see, down at 79. Guess what? Fed on Wednesday. We want to keep an eye on that. So, really, let's see. That's it. One name I'm watching, Facebook. I'm kind of I'm a believer in their fundamental story, and I want to continue to look for long-term buying opportunities and see where it takes me. And I'm willing to get nibbled a little bit, because eventually I do want the right timing. So I'm willing to take small loss here, break even here, etc., to try to get the trade that I really think is going to happen on Facebook at some point, which is to really clear all these, hurdles, basically call it $38. I know that was that psychological level, that huge level. That's really the potential trade I see, and then potentially a breakout from there, but that's pretty far into the future for right now. But this has worked. I didn't catch the move up, so maybe I'm just late to the party right now and I'm trying to play the desperate dance. But maybe, this is our view on Facebook, and we got our lower highs here relative to the median line. We touched the median line, then we broke through, and now it looks like we could be gradually moving sideways, until we get to the beginning of next month, call it. So you want to see that, but if this median line holds, then I think you stick with the trend and you try to play this to the upside, because although we never really had a lower high here, we just kind of broke down. Let's get the right tool. So we actually had a higher high here. Now it failed, but we got this lower low, which ended up being resistance. But we're just kind of gradually moving down on light volume other than earnings. Again, I think we're going to get a good trade on this, and that's members, that's why we started to scale in. So really, that's it. I will talk to you next time. Hope this video helps you. Take care, have a great one, and I'll talk to you next time.